I think we're blessed to have this conversation with one and only Rene Hicks. Welcome to the show.
Thank you, Mwikali. It's a pleasure to be here.
Karibu sana.
Asante.
You know me, I know you. I am so starstruck. Do I look like it?
Bless, no.
No,
I'm
I was
so
calm.
honored to be here.
I was so calm, right? It didn't show. I'm doing great, guys. Poker face, Ikosawa. Kindly introduce yourself to the people, Rina, for anybody who's hearing about you for the very first time, and this is your camera.
Sure. Good morning, everyone. It's a pleasure to be here this morning. My name is Rina Hicks. I am an investment banker, which means I help people invest their money and help companies raise capital. I'm also a certified professional coach, and I like to call myself an investment coach and an author. Yeah.
We're happy you're here.
Thank you.
Because we are working on us today in all the aspects that we can in 2 hours. Then we'll pick up tomorrow again and see how we can do better at that. When you talk about investing and the investment options that are out there, what does this mean?
Yeah. So really investing is putting your money into something that will either bring in some cash flow or cash at some point in the future, or that you'll be able to sell and get money out of it. But the idea is to put money aside into something that will grow in value, that then protects you from risks or enables you to be able to benefit from it at the end of the day. So that could be anything. It could be, I can buy 5 chicks that are layers. I feed them for a few weeks and then they start producing eggs and I sell those eggs and I get cash.
Yes.
Or it could be a financial asset like shares or anything else that you invest in. And then in the future it grows in value and brings in back your money and some interest or profit.
Okay.
Yeah.
And most people, when we talk about money and investing, they'll be like, I don't earn enough to save.
Yeah.
I don't earn enough to be able to put money aside for this. I don't think I have a good hand in business. I don't think, there'll always be a reason as to why we don't walk this journey of investing and protecting our future or even our children's future. And I'm sure you've come across this a lot. And I don't know how you handle when somebody comes and tells you that.
The reality is we cannot afford not to invest.
Ooh,
as long as you have an income, whether that is an allowance from a parent or, some access to cash, you have to put something aside. Because if you don't, then what happens in the future? The reality is we only live for how long? I mean, not live, but work for a certain number of years, 40. If you start working at say 25 and then you retire at say 65, it's 40 years.
Yeah.
Now you need to use those 40 years to then propel you and help you to not just survive, but to do okay and to thrive even when you're 80 and 90. You could live to 100.
Yeah.
So what happens between 65 and 100 if you haven't put something aside? Like that stuff we don't even think about. And who told you, Mwikali, that you will have work after the age of 45? Who told you that your business will work after 50? It could collapse even earlier. You could be retrenched. I mean, we've seen that in the last couple of months, how businesses have had to cut back. Funding has been cut. Certain businesses had to close shop because of the situation with COVID and the lockdowns. So, there's this assumption that we have when we're young, at least I had it, when I was in my 20s, that first of all, guess what? I'm only growing in my profession. I'm going to get more qualified. I'm going to earn more money. And every year, my money has to increase at least by inflation. It doesn't work that way.
It doesn't.
In real life. And so because it doesn't work that way, we have to put money aside in case I get sick, in case I have children who need special needs and who have special needs and need a special kind of education, in case of not being able to earn an income later in my life, and also for retirement, so that when I don't have the energy to work, I have my money that's working for me and cash flows that I have created that pay for the needs I have at that point in time. We don't have a choice. Even if you earn 10,000 today, put aside 500 bob, 200 bob, 100 shillings, whatever you can, so that at some point in the future, you're able to benefit from that. I usually say at the worst, put 10% aside, and that's little, but put 10% of everything that you earn, whether it's a gift. I give it your birthday, I give you 10 G's, put a G aside, but put something aside every time you earn an income. And that way you get into a habit of saving and investing.
I think the misconception mostly is I need to earn a huge amount of money for me to be able to save. But that's not true.
It's not true. In fact, when you look at the majority of the wealthy people globally, it's been a slow process. There's a book that was written several years ago by a professor. His name was, unfortunately he passed away, Professor Stanley J. Thomas. And he did some research with another partner of his, and just to sort of study and understand who are these wealthy Americans, these millionaires in America. It's not Kenya. $1 million in America is 100 million shillings. Who are these millionaires in America? And so they took time over 6 years just studying these humans and trying to understand who are they and what do they look like? Where do their kids go to school? Where do they live? What kind of cars do they drive?
Yeah.
What kind of business are they in? And they found majority of those people were not people who had inherited money. They were not people who had won money in some kind of lottery. They were people who had been in, a lot of them farmers, a lot of them teachers, people in regular jobs, not necessarily lawyers and investment bankers like I am. No, and doctors, no. Regular people who took their businesses seriously and made decisions not to splurge on too much. So they didn't take their children to the most expensive schools so that they can afford to continue to invest in other things.
Yeah.
They live in regular neighborhoods, drive regular cars, and one of the things they found is, you know, the people who splash and show it, you know, they have fantastic cars and they live in huge homes and have another holiday home. There are those who are wealthy, but majority of those do it for the show and do it to show us. A lot of them are in debt and a lot of them don't have money.
That is true.
So the ones who have are the ones who are slowly saving. So, you know, even my clients, I've worked with clients. I have a client who I've worked with for 18 years, Mikali. In fact, we celebrated 18 years in February.
Oh.
He started at the age of 19.
Beautiful.
Slowly, 5,000, 2,000, 10,000. It's not that he had a rich father who gave him money. No. And continued consistently. Today, he's number 3 in his circle in terms of savings. He has bonds and shares and he's working to become top 10 in one of the companies that are listed on this stock market.
Yes.
Why or how? Consistency. It doesn't matter how much you have or what you start with. The issue is, can you be consistent in what you, whether it is 100 bob, 1,000 bob, of course the more you have the better.
Yes.
But you have to be consistent. The younger that you are, the more you should put away. Because the more you're able to put away, the more you benefit at the end of the day. In fact, I normally give an example of a young person at the age of 25, just 2,500 every single month. I mean, you spend that in a weekend.
That's true.
2,500. If you
Yes.
put 2,500 away, in fact, the whole month you do nothing but save so that at the end of the month you have 2,500. If you put away 2,500 for 35 years, it sounds like a long time, but just be consistent. It's not much. You just keep sending it into what I can call a money market fund, right? Every single month. At the age of 60, you will have 8.9 million.
Sorry?
Yes. If you put 5,000 from the age of 25, you'll have 17 million. Painlessly. 17 million, and that is at 10% interest only, 10% per annum. Just slowly putting aside, you're not even thinking about it. It's in a money market fund or some other opportunity that you're not really thinking through. You will have 17 million at the age of 60. What is the excuse?
There's no excuse.
There's no excuse.
There is no excuse, and that's at 2,500.
Well, the 17 million is with 5,000. But
With
if you do it with
5,000,
2,500, you'll end up with a bit over 8 million shillings.
And you see, this could also change. If you started at probably 25, you could get a job that earns you more.
And then you're able to put 10,000.
Yes.
You can imagine 10,000. I mean, what are we even talking about?
My goodness.
You will be extremely wealthy.
Rina, you know, I've never looked at it this way. That I have 40 years, a maximum of working. Never.
Yeah.
You get in and you're like, nimeanza sasa, wacha iende sana. But you're not thinking, how long will I be here for?
You know what's crazy? When you talk to a lot of corporates, at the age of 55, when people are seeing 60 like this, or 65 when
That's
people
when
are
they
retired,
start.
that's when they're like, oh my gosh, I'm going to retire. What do I need to do? And yet, they could have started at 22 when they got their first job.
Yes.
And now at 55, it shouldn't be a crisis that you're retiring. A lot of people, unfortunately, it's a crisis. But fortunately, you know, God redeems time. And, you know, we can find ways in order to help you at that age so that then you create a plan for the next 10 years. And fortunately, at the age of 55, if there's someone listening and they're 55 and they're feeling, oh my God, or maybe even 60, the key thing is that even at that age, the key thing is please start today. Don't wait. And today, at 55, at 60, you have networks, you have wisdom. You're not going to make crazy mistakes like you would have at the age of 30. Yeah. And so you can leverage that to then move to that next level. But don't wait another day. Don't wait another day.
This is a perfect conversation for our audience today because we have a very, very young audience, and I hope they're learning that you need to start now, that you shouldn't wait until it's a bigger job, that when I get married, then we will do something with my future wife. No, it shouldn't be that. If you have any questions whatsoever when it comes to money and investing, this is the platform. Send in your questions, 111 444 111. It's just going to cost you a shilling to do that. Switch TV KE on Instagram, Switch TV Kenya on Facebook. We're going to be right back with Rena Hicks after this break. Welcome back to Full Circle with Mukali. We're talking money, investing for future, and that there's no age limit, that you could start at whatever age. It could be a gift, it could be your earnings, and the more money you get as you go up the ladder, the more that you need to start investing in your life. And it's a powerful conversation. I am happy I'm having it now, and I hope you are as well. If you have any questions whatsoever, 111 444 111. It's just going to cost you a shilling. Send in the questions. Switch TV KE on Instagram, Switch TV Kenya on Facebook. I think we have a question here for you, Rina. I think it leads us to investment options that are out there for anybody who's thinking, maybe I'm not good for this one, I'm good for this one. They don't leave a name. They're saying, "Hi Mikali, great to see Rina on set. I don't believe in saving. I find it to be a very slow way of financial and investment growth. So apart from throwing a 5K, a 10K in my account every month for savings, is there another way where I can save money or invest?"
Okay.
Yeah.
So I hear what they're saying.
Yes.
But you can't invest unless you have savings.
That's true.
In fact, one of the things that we normally say is, first of all, before you start putting your money in very high risk opportunities that will lock in your money for a period of time, first have money aside for a safety net. Okay, which is your savings. So money that you'll be able to tap into if you lost your job, if business doesn't work out, if an emergency occurs, you need to have money set aside. So savings sound boring, but they're very important in giving you that safety net. So please put money aside that is worth at least 6 months of your critical monthly expenses. So right now, how much do you spend on the critical things, transport, education for your children if you have kids, rent, the critical things, right? How much is that in a month? Multiply that by 6. What does that come to? Have that in either a savings account or a money market fund that then is able to sit as an emergency fund. Now, yes, we have to invest our money, because the money needs to grow. In fact, the key thing with investing is putting aside money that earns you higher than the rate of inflation. Inflation today in Kenya, in July, was 6.44%. So if you're earning 3%, 2% in your bank account, you need to sit with your bankers and negotiate with them to give you higher, or look for an alternative so that you're able to earn at least 6.5 and above. So where are those options, right? So the first place, we normally go in a graduated scale from lowest risk to highest risk.
Let's go there.
Yeah. There's 5 different asset classes. 5. And the reason they're called asset classes is just a convenient way that financial experts have sort of just over the years structured the way that investments are considered, just for convenience of being able to describe them, the way that their characteristics and so on. So there's 5. The first one is cash and cash-like assets. So if you want to put cash aside, why? For emergencies, as I mentioned, and also for liquidity. Now, you talk about AKA 5K, but the reality is investment opportunities come, and maybe it's not AKA 5K it needs, maybe it's a 2 right? 200,000 shillings. Where am I going to get 200,000 if I've not been saving that 1,000, 2,000 over time? So you want to put money for emergencies in cash and cash-like assets, such as your bank account, but negotiate a good savings and find out, do you have a current account or savings account, and what are you earning in that account? Should you go for a fixed deposit account? What are the rates that my bank is giving? Can I negotiate to get higher? Another option for cash and cash-like assets is your SACCO savings. Right? SACCO savings also, or money market funds. And money market funds are funds that are pooled by institutions like asset management firms, people like Old Mutual, ICE, Sanlam, CIC, there's many of them. They pool funds. They have different ones called unit trusts, but the one I'm recommending for cash and cash-like assets is money market funds. they earn about 8 to 9.5% per annum. Some even 10.5. But we can discuss which ones and how do you evaluate which ones. But in a nutshell, those are the ones.
Okay.
That's one.
Yes.
Another asset class is equities or shares or stocks. So if you have a chama and you've registered that chama, it's a limited company, and you own shares in that organization, you're a part owner and you're a shareholder. That's an investment. Or if you buy shares that are listed in a company on the stock exchange, whether that's Facebook or Apple or Safaricom or KCB or Diamond Trust, you're a shareholder and a part owner of that company, which means when that company not issues, but does well and has a profit,
yes.
you share in those profits and you earn dividends, and the price of that stock can go up when there's a lot of demand, and that is called capital gains, when the price goes up and you can sell at a higher price.
Okay.
So that's the second one.
Okay.
Stocks or shares or equities, as we call them. The third one is fixed income investments. Those are treasury bonds, treasury bills, commercial paper, corporate bonds. This is debt. So you lend money to an institution or to the government, and they pay you back. They promise to pay you back that money after a period of time with an interest.
Okay.
Okay. So the government pays very well. 12%, 13%, 11%, depending on the length of time. So treasury bonds go from 2 years to 30 years. Treasury bills, 3 months, 6 months, 12 months.
Okay.
Okay. So you can earn good interest from lending your money to other people, and they pay you back. Obviously, there's risk.
Yes.
And the lowest risk of those is the government. Lending to the government, they always pay you back. That was the third one. The fourth one is real estate. That one we all understand. Kenyans understand real estate. Broti. But I don't like just broti.
Yes.
Right?
Yes,
it needs to be able to have potential to bring in cash.
Yes.
So can you develop it? Can you do something with it? Is it, construct some units, and they don't have to be too expensive. You can have, small units that are not too expensive. 200,000, you can build something.
Yeah.
And that will bring in an income every month. And the idea here is you must always, by the way, invest in such a way that you understand what return am I earning from this opportunity. A mistake we make is investing without thinking about the returns or the cash flows that are going to come. You don't want to invest 2 million to earn 10,000 shillings.
Nope.
No.
Don't do it.
No, or 5,000. You want to invest 2 million to at least earn 20,000. A 10% sort of yield or return is something that you must do. Even with real estate, you need to do the math and figure out what yield or what return am I likely to earn from this. And if it makes sense, go for it. But check, does it actually make sense? Or are you better off putting the money with a bond with the government, right? So we looked at real estate, and real estate is building units to sell for rentals, buying land, subdividing, selling, which is what we call land banking. And then we go into alternative investment options. That's the fifth asset class.
Okay.
So this one has so many, everything under the sun that you could potentially do falls under alternative investments. Art collection, buying gold, and you can buy gold in Kenya, by the way. Cryptocurrencies, forex trading, private equity, hedge funds, managed futures, derivative trading. There's many. Everything that you can imagine falls under, that is not within the others, falls under alternative investments. We were having a conversation the other day, and I'm like, investing, it just sounds complex, but it's so easy. You can go to Gikomba, buy t-shirts for 50 bob, go to Toy and sell them at 300 bob.
Yeah.
Right?
Yes.
You're making a huge return on that. That is an investment, because you've invested in 50 bob t-shirts, you've gone and sold them at 300 bob. That difference that you've earned is called a capital gain, or gains from being able to sell at a higher price. And you've made money. And so it doesn't need to be complex. The question is, what need is there? If you're looking at a business, what need is there that I can serve? There's always money to be made in different ways, and there's always opportunities that are around us. The question is, put money aside so that when that opportunity arises, or you think about it, you have money available in your savings to be able to take advantage of that opportunity.
Great. I hope you guys were taking notes. Quickly, we have questions.
Okay.
Hi. Hi, Wikali. The conversation on money is really informative. Kindly ask the guest the 2,500 or 5,000 she's talking about. Do I put it in a fixed account or a SACCO or invest it? It's Fatma from Kabete.
Thank you so much, Fatma. So that concept called compound interest works with investing. It doesn't have to be a specific account. It can be let's use that Gikomba story. I've gone to Gikomba, I've bought, right?
Yeah.
50 bob. I've sold at 200 bob. I've made 150 shillings above my 50 shillings, right? That 150 shillings, instead of going to Java to have lunch, right?
Yes.
Or to wherever it is,
Yes.
Chapati Dondo,
Yes.
I take that 150 and then go and buy more shirts. Or find, maybe it's now shoes or belts or whatever it is, earrings that people like. Or maybe I make beaded something. I'm reinvesting it. Now, when I reinvest my earnings and then I sell, that's going to be compounded because I'm taking what I have earned, reinvesting it and making more out of it. And in that way, you earn a compounded interest. So you can put it in a money market fund, you can put it in shares, you can start a business with it and continue to reinvest in it. You maybe just take out a little and reinvest it. And that habit of reinvesting is what you end up getting so much. That example I gave you of 17 million.
Yes.
Only the actual cash you put into the investment is only 2.1 million. The actual cash. The rest, 15 million, is interest earned.
Okay.
From reinvesting. So when you reinvest, then you're able to generate a lot of returns. Another question I hear people asking is, how do I know where to start? Where do I begin? What options should I consider? A good investment option is the one that aligns with your goals,
That is true.
aligns with your values and your personal circumstances. So I can't do that job for going to Gikomba and selling. I'll go to Gikomba to buy clothes for my children, it's okay. But to go into the habit of now I go and find, I can't because of my personal circumstances at this point in time. But there are those guys who have time who can do that. Some people can't invest in the stock market because they don't know. They don't know where to start. But what then do you need to do? To start taking time to understand and gain knowledge, because without knowledge you cannot get into the different investment opportunities. So when you're starting, you start with, what do I know? Maybe you grew up in a farm and you know, your parents did pig farming and you're very comfortable with pig farming, you understand it, you know where to sell, you know where the market is, you know where the suppliers are for different things, you know where they get vaccinated, all those details, you know them. And maybe that's perhaps where you can start. Start with what you know, that you're comfortable with, that is an easy thing for you to start to do. But don't start with something because Mwekali is doing very well, doing ABCD, and therefore let me join Mwekali. Start with what you know. As you grow your knowledge in these other things, but begin with where I normally starts by saying is, we have to think through our assets in these ways. Our assets must cover our basic needs, must give us an opportunity to sustain our current standard of living for the foreseeable future, and then also give us an opportunity to create wealth. The challenge is we all want to create wealth, and so we put all our money in risky opportunities, and we only ask, what is the return? How much will I earn? 30%. Let me give you my money. But we can't do it that way. Is my safety net covered? Do I have money for emergencies? Do I have money to take my kids to school next term? Have I saved enough for my rent for next month and the month after that? Then the next level is, I need to sustain my current standard of living. So where can I invest that will give me more money than inflation? And then beyond that, I can now take risks. Once I've invested in those two major areas, now I can start taking risks like crypto. And, you know, I can buy Bitcoin, or I can invest in Forex trading and other exotic things that will give me 3 times my return. It's okay. But once I'm covered and I'm not in a situation where, you know, I watched, and let me just share this story quickly. I watched a news article where a lady lost her husband. And her husband had an insurance policy. And so when he died, this insurance company gave her, or, you know, paid her out about 3 million shillings. Now, she took all the 3 million shillings and put it in this one investment opportunity that she knew was going to do really well because the returns were very high, highest in the market. Okay? Highest in the market. Unfortunately, during the season of COVID, she lost her job. Now, this investment opportunity did not work out and she cannot get her money out. So now what happens? Her child is not going to school. She's actually in depression, under medication, being treated because of stress. Why did she put all of it there?
She didn't consult.
She didn't consult. You can't do that. It's not that it's the best opportunity. When risk is high, or rather, let me put it this way. When return is high, when you're promised high return, more likely than not, the risk is very high. And so don't risk money that you could lose and you will end up in a mess. Only risk money that if you lost, you will not end up in a crisis.
Rina, our time is up.
Are you kidding?
But
We just got started.
I know. And I think I've said this about all the guests that have come on the show today. But Caro, do you think we could have a Q&A a while back? Because we have so many questions and we don't, yes, Caro says yes. But before I let you go, can you quickly talk about your book?
In fact, yes. It's a gift I've brought you.
Oh, thank you.
I wrote that book several years ago.
Yes.
It's called Money Wise. Create, grow, and preserve your wealth.
Okay.
And it's a very simply written book. I wrote this book after, going through a very huge journey of making mad mistakes with my money, looking for solutions from other books. And these books were great, but it was only about, I couldn't relate. It was about 401ks and Roth IRAs and superannuations and ISAs and things from everywhere else. I was like, what? And so I took time and wrote this book in a context that any African can understand, because we have available the opportunities I talk about. And it starts from the beginning. Where do you begin? How can I create money? How can I grow money? How can I invest it? How do I preserve it? With very practical examples. And so, yeah, enjoy the read.
You know what, Rina? We have a segment called Book Circle.
Oh, do you?
Yes, we do.
Okay.
Caro, see what I'm doing? Where can they get it? How much is it going for?
It's 1,000 shillings.
Yes.
It's available on Jumia, on Raffle Books, Nuria Books. It's available on Kindle, on Amazon, at Textbook Center, just about any bookshop. You can call us. By the way, if you need any help, feel free to write to us, sema@moneywise.co.ke, SEMA, sema@moneywise, one word, .co.ke. We can get you the book. We can help you get, investing. You're looking for an investment option. You don't know where to start. We can connect you with the right people to get you started on your investment journey. We also have a course on investing that will help you figure out, where do I start? How do I move from here? In fact, it's so coincidental. We begin our next cohort this month. We open on the 26th of August.
Okay.
So write to us and we'll be able to...
Still on SEMA.
sema@moneywise.co.ke, and we'll send you the information on that.
Rina, thank you so much for coming.
My pleasure.
Looking forward to having this conversation with you again and answering all the questions that we didn't get around to. And thank you for sending in the questions. We appreciate it, and we'll definitely have her back soon for that. We're going to take a very short commercial break. We will be right back. If you're a fan of Quiz Show, then guess who's coming in? Buddha Boss. Don't go too far.